Hey guys, it was an incredible week with gold. Gold went to the moon. It looks like it's ready to go to Mars. I just hope that you were able to follow the trade setups that I shared with you last week because it was one of the biggest moves we have ever seen in gold ever. If not, never mind. Here's the regular weekly analysis that I do every Sunday before the market opens on the following Monday. And here we go, guys, and today I'm wearing my tick mill hat. I'm not really a hat wearing guy, but somebody told me I would get more subscribers to the YouTube channel if I wear a hat. You see, a lot of the big YouTubers, they always wear a hat indoors, which is kind of weird because, it's supposed to protect you from the sun. I think that's what a hat is for. Anyway, if you subscribe to the channel because I'm wearing a hat, let me know in the comments below, okay? All right, let's get into it. We're starting off with the weekly analysis, the regular analysis that I do on every Sunday before the market opens on Monday, and this week starting on the 29th of September going through to the 3rd of October. And the high impact news that we're going to look at this week, I'll just let you check forexfactory.com for your local times. Of course, the main thing you want to be concerned because it's the first Friday in October, and you know what that means if you're a Forex trader. It means the non-farm payrolls, the most watched news item by Forex traders. So just be aware of that. Check forexfactory.com. All right, let's look at the profit and loss, which we had from last week's trade setups that I shared with you, and it was a stellar week. It really was amazing. But first of all, let's look at the DXY. I always like to follow the US dollar index, which is the US dollar compared with 6 major currencies. And of course, since we trade gold and the major pairs, which are paired with the US dollar, it's important that we know what the US dollar is doing. And it looks like it's had a great couple of weeks, the US dollar index. So it's getting strong. Is it really? I don't think so. Let's look at the weekly chart, the big picture. And we see since January, that's when Trumpty Dumpty took office, it's not doing so well for the last 9 months. Yeah, we've had some pullbacks. You see those green candles, but that's not sustainable. And I keep telling you that week after week, the US dollar is continuing to decline. So I don't really expect that we'll see much more pullback. We could. It has been higher just a couple of months ago. It made a big move up, but then fell back down. But we just continue to monitor the US dollar because, as I said, that's paired with our major pairs and paired with gold. So we need to be aware of what's going on with the US dollar. And it looks like they're trying to strengthen it. They don't like it to be below 100. So it got up to 98 and change. But again, that's not likely to be sustainable, but we don't know. We keep our eyes on it and just be aware. And then Bitcoin, well, last week I gave you a buy limit. And as Bitcoin does sometimes, it dropped like a brick. I mean, it dropped $3,000 in one day, the first day after I gave you the buy limit. So that's why we use a stop loss, okay, to protect our capital. It got down to 107, which is a major support level. And we'll just see how it plays out this week. And then gold, this was, oh, what a champion gold was, XAU-USD. Oh, man, it went to the moon. Looks like it's going to Mars. Just unbelievable. Now, I gave you a buy limit at 36.70. It didn't come down to that on Monday. It just, as I did say in the video, it might just start to go straight up. And it did. It went straight up all day Monday. So really, if you got in anywhere Monday or Tuesday, you could have made several hundred pips on that. But the move from Monday up to the end of Tuesday, that new all-time high at 37.91 was a move of 1,300 pips overall. So an incredible move by gold. And we're going to see higher prices, no doubt about that. With the Euro-US, it started out Monday and Tuesday really good, 90 pips on that before it did a topsy-turvy. As we have seen all year long, things play out good for a couple of days and then they go kind of strange, kind of funny, kind of weird. But we did get 90 pips on the Euro-US. Then the Odd-US, 53 pips on that one. And the New Zealand-US, meager 36 pips on Monday and Tuesday before it went the wrong direction. And then the pound US, I gave you a buy, a market execution, and that one opened, it was a beautiful sniper trade, I guess you could call it, and 78 pips over Monday and Tuesday. And then the USD CAD was a sell. And with the strengthening of the US dollar that we saw last week, that hit the stop loss. And that's why we use a stop loss, isn't it? To protect our capital. Some trades don't work out. And then the USD JPY, the UJ, was a sell, market execution. If that opened on Monday, if you executed that order on Monday, you would have got 47 pips on Monday and Tuesday before it turned around and went the wrong direction with the strengthening of the US dollar. So a good profitable week, except for one, the USD CAD that hit the stop loss. And then, of course, I want to remind you that some of you guys keep asking me about this support and indicator that I use on MT4. It doesn't work on MT5 or Tradingview, but it's great for MT4. I've been using it for 10 years. It's absolutely free. The link is below this video. It gives you your support and resistance from S1 to S5 and R1 to R5, and it updates automatically every day. It's a great indicator, absolutely free. If you want it, just the download link is below this video. Now to the pending orders, the trade setups that I share with you every week to help you make profit with your Forex trading. But of course, just remember that this is not financial advice. I'm not a financial advisor. I'm not a CPA. I'm not suggesting or recommending that you take these trades. It's up to you. All right, it's up to you to manage your own account and to use good risk management and to protect your capital. And I only have 2 pending orders for you. All right, that's the Bitcoin buy. Okay, no pending order. It's just an execution. Just buy Bitcoin with your stop loss pretty close. All right, at 107,200, because 107 is where our support zone is. So, but it looks like it's bouncing off of our trend line, so it should start to make itself up to higher prices, back up to 110, 115, and beyond. I don't trade Bitcoin. I just buy Bitcoin on a regular basis as an investment in digital assets for the future. But if you're trading Bitcoin, I have a buy trade market execution with a stop loss at 107,200. And then gold, the other pending order that I have for you, the other trade setup I will share with you this week. And the only one is XAU USD is a buy limit, okay, with your entry price at 37.50. That's the yellow line you see there, our support zone, with a take profit at 3,800. And if it continues to be like it has been since the 25th of August, very, very bullish, we should easily hit 3,800 and beyond. And I've done something I don't usually do. I've shown a stop loss. As somebody's been asking me about, what about the stop loss? Where do you put it? How do you manage the stop loss? How do you manage a risk? Well, this little tool that Tradingview has, the green and the red box there, you can measure your profit and loss. And this is a 1-to-2 risk to reward ratio, the red box being the loss and the green box being the profit. This is a 1-to-2 risk to reward ratio. So with that being a 1-to-2, I have my stop loss at 37.25, okay, with the trade opening at 37.50, the stop loss at 37.25, and the take profit at 3,800. So with a 1-to-2 risk to reward ratio, if you win 2 trades out of 5, you can still make money, still make profit. Losing 3 trades out of 5 if you use 1-to-2 risk to reward ratio. Now that's a 250 pip stop loss. That might be more than you're willing to risk, so reduce your lot size. All right, just reduce your lot size. But that's the way I use my stop loss. I don't usually show the stop loss on my charts because, as I say, it's up to you to manage your own risk, to use your own risk parameters. Whatever you trade with, however much capital you have, how much you want to risk. But I generally will risk 1% or less on any trades that I take. And if you shouldn't risk more than that. Most people will say 1-to-2%. I like 1% or less. I don't like to lose money. All right, so maybe that tool on Tradingview will help you with your risk management profile. All right, but I always suggest that you use at least a minimum of 1-to-2 risk to reward ratio. Okay, I hope that helps you. So as we close out the, the weekly analysis, I want to remind you that I'm using Tickmill as my preferred broker. They are a great broker. They have very low spreads, very low commissions, and also they have crypto trading 24/7. A lot of brokers only give crypto for 24/5, but Tickmill provides crypto trading for 24/7 if you're a crypto trader. And then they have a mobile app, of course, that you can use on your phone. And then what I really like about them is they have copy trade. So you can copy all of my trades that I do on a regular basis, on a daily basis, if you want to, but you have to sign up with Tickmill, sign up with your account with Tickmill, and then copy my trades on their social trading platform. If you want to do that, just go to rickrayfx.com/Tickmill. Let's get away with a hat. I'm not a hat guy. Never mind. Okay. Yeah, rickrayfx.com/Tickmill. I'd love to have you in my team. And that's it for me, guys. I thank you for being here. Thank you for following. Thank you for subscribing. Just be sure that if you are new to the channel that you have subscribed by clicking the subscribe button and click that little bell so you'll be notified every time I make one of these videos, which is every Sunday before the market opens on Monday. So wherever you are in the world, I wish you all the best with your trading. Don't forget, be kind to yourself, be kind to others. I'll see you next time.